Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm going to talk a little bit about inflation. This is something that has really been sort of weighing on my mind as I read the news and follow stocks. It does look like, at least for a short period, perhaps longer, that inflation is a real thing that's happening right now. And where my mind goes with all this, of course, is like, what does it mean for us as stock market investors? How can we make money during a time of inflation? And perhaps most importantly, the reason we all invest and the reason we all work jobs is because we want to build our wealth over time. So what is the best way to really make money during inflation? That's what I'm going to share some thoughts on today. If you enjoy these kind of topics, please give the video a like, subscribe to the 40 Finance channel if you enjoy stock market analysis. Thank you very much for supporting the channel. So hopefully most of you understand the basic premise of inflation, which is just that the cost of goods and services goes up, and at the same time, you're making the same amount of money or you have the same amount of wealth, right? So if you made $50,000 last year and the price of goods across the board went up, whether it's gasoline, milk, bread, new homes, whatever it is, if that price is going up and you still have the same amount of money, then your money is effectively weaker than it was the day before. Now, there's been plenty of people who have rung the bell on inflation as a warning, like, hey, all the stimulus and all the programs that are out there is going to drive inflation over the long term. And we're starting to see some of those numbers come in. If you haven't looked at the housing market lately, if you haven't compared your grocery store bill 6 months ago to today, I can tell you that inflation is definitely occurring at some level. But the Fed has blown most of these alarms off. They're saying like, hey, we're calling it transitory inflation, aka temporary inflation. And as we get deeper into the recovery, most of these concerns will dissipate, and we are not concerned about long-term effects of inflation. Now, regardless of whether you think it's transitory or perhaps longer term, the fact of the matter is, I think most of us agree that this is occurring right now. So what is the best way to make money in an inflation scenario? Well, one of the things that's really unique here in 2021 with inflation going on around us is the fact that we have relatively low interest rates. Now, those interest rates have ticked up a little bit since, their bottoms during the pandemic. But for all intents and purposes, borrowing is cheap right now, particularly at the mortgage level and some of the consumer debt options that are out there. The same can be said for some of the small business loan programs that are out there. Not sure how many are still active, but if you're getting a business loan at 5% or less, or even really under 7% for that matter, then you're in a unique opportunity to borrow in a time of inflation. And the good news about this scenario is if you know that your dollar is going to be worth less tomorrow than it is today, then the fact that you're taking on debt, slowly over time, your debt actually becomes less valuable, right, to the bank and technically to yourself. So if you borrowed $10,000 at today's value, and we know that the power of the dollar goes down over time with inflation, then the value of the $10,000 that you borrowed here in 2021, by the time you get to 2024, that would have cost you the equivalent of $14,000 or $15,000, depending on how bad that inflation could get. So it's a really interesting time right now because with interest rates low and inflation going up, you have a very intriguing spread where if you have the right options, you could conceivably add to your wealth at a much faster pace than you would normally by playing the spread between borrowed money and growing assets. And what makes this situation unique is that normally in inflation, interest rates, at least from lenders, interest rates would actually go up because they would recognize the value of the dollar declining. So they would increase interest rates for their loan programs in an effort to make more money. So if I was a smart banker and I knew that inflation was going on, I wouldn't let you borrow $10,000 at a 5% interest rate, right? I'd want to mark that up to 8 or 9% if I wanted to protect my margins, because your payments as they come through over the next few years have to offset the fact that that value is less. All right, so that's an encapsulation of where we're at today. Unique opportunity, prices are high. Whether or not you believe that inflation will be a long-term thing is really just an opinion, and it's kind of a flip of a coin. So a lot of the stuff I'm going to talk about here today has to be banked on whether or not you believe inflation is transitory or a much longer term thing. From where I sit, frankly, the jury's still kind of out for me on this one, but I think that there's a combination of enough short-term items that you should consider trying to play this game a little bit, at least through 2021. All right, so some of the most obvious opportunities right now that are arguably a little bit hard to pull off to really get the full value of the discrepancy, and that is in housing. Housing prices are super high. Theoretically, with escalated home values and peak demand, you could sell your house today and bank the profits, and you would be doing better than if you sold the same house at the same price 2 years from now. Now, the big catch with this is, let's say you sold your house and you made $100,000 by the time you paid off the old loans and everything. Now you have $100,000 and no place to live. So the trade-off becomes very critical if you do sell your house to lock in the gains in this situation, is that you have to find an affordable place to live that's not paying the same marked up values, right? So buying another house in the same neighborhood, for example, wouldn't do you a lot of good because you're going to be paying inflated prices there. In fact, you could argue that moving right now might actually be a bad idea if you're going to stay in the same zip code or same city, because your inflated values that you're paying on the new property could actually come down. Your house might be worth less in a year or so after moving in. So selling a property makes a lot of sense in terms of cashing out these inflated gains that most of us have on our property. The hard part is solving for where you go next. Now, if you didn't have family and friends in a particular location, you could just move to a city, state, or country that has a lower cost of living, and that would allow you to preserve the gains you made off of your house. Obviously, this isn't very easy for most people to pull off. All right, so outside of housing, you have a lot of these investments in stocks that have run up so high over the past 12 months or so, right? So whether you're talking about some of the stocks out there that are overvalued based on their earnings and revenue, or you're talking about a painting you purchased that has since tripled in value, whatever you have that's tripled in value and left you scratching your head as to, wow, I can't believe this went up so much, there could be an opportunity to sell those kinds of assets that you own, assuming again that you don't buy right back into other inflated assets. So now you've locked in your profits from the overvalued asset, but you're sitting on this time bomb of cash that you know is also losing value. So where can you distribute this cash? Or if you borrow money, where can you take your borrowed money and get the best return during an inflationary period? So the easiest one, at least for a stock market YouTube channel, is to look for undervalued stocks. But the key is that these stocks have to have strong growth rates, whether it's revenue, EPS, whatever metrics you follow, they have to have strong growth rates into the future, right? So you have to believe that this company in 5 years will be making a lot more money than it was today. All the stocks that I've looked at that have huge growth rates, plus 25% or so for the long term, plus 25% for each of the next 5 years, all of those stocks are trading at a fairly high multiple, and they're all at risk of coming down if we were to see a change in market conditions. So there's a couple ways to play that game. You can decrease your risk to a single stock by getting into a growth-orientated ETF. So, for me, that's ARK, ARKK, which is very popular right now. But there's bazillions of ETFs by reputable companies that can allow you to get into growth stocks or sector growth stories. And the key to this play is just picking the highest growth sectors that you're basically betting on absolutely for sure in the next 5-10 years is going to be making a lot more money than today. So, we probably think electric vehicles certainly appear to be headed that direction over time. Might be good to have a EV ETF. It will go through some roller coaster rides over the short term. But on the ETF basis, it should continue to grow. I think technology, of course, we've talked about a lot in the past year. Anything artificial intelligence, microchips, semiconductors, all of those things would appear that their market is built for the infinite future, right? So ETFs in those categories, they may help you lower the risk of a single stock going up and down, but they should have long-term appreciation outside of an inflationary environment. Now, outside of stocks, I would start to think about what are your opportunities to start a business or buy a distressed business of some kind. And the reason I say distress very specifically is because in this type of inflationary period, in order to protect yourself against a downturn, right? So if inflation comes back to earth, you need your assets to not lose a big portion of their value. Starting a business right now protects against a lot of that because you're starting from zero, right? And you can borrow the money, which the real cost of borrowing the money is going to go down in an inflationary environment. And if you build a business with your bare hands at $0 and you get to 5 years from now and you continue to grow revenue and profits, that's going to be one of your best investments you can possibly make in this current time. So you're taking money from the bank to build a business that over time will grow revenues and profits. But unlike stocks, you get to do this from zero. So you're coming in and building value at the peak of inflation, and your revenues continue to go up. If you're doing everything right, your revenues continue to go up when inflation comes back down. It's exactly where you want to be. All right, another opportunity to make money in this inflationary environment is to sell these inflated assets. And I'm not talking about selling your own. I'm talking about commission work or a job related to the selling of inflated assets. Okay, so if you're getting a percentage of a sale for an inflated asset for someone else, you've skipped the requirement to own the asset, but you inherit the upside that it contains right now in this environment. So you think about real estate agents right now, it probably couldn't be a better time except that there's low inventory, but every house you sell has been marked up well beyond probably what the house is worth, and you're getting a percentage of that sale. And as long as you're a smart real estate agent and you know that this is the good of the good and you're banking money for the future when stuff eventually comes down again, it's a great place to be. Now, from a temporary opportunity, so let's just say 6 to 9 months from now, you think inflation will continue on. You don't want to get your real estate degree or certification because that probably takes a year anyway. On the short term, I would look into opportunities to sell things such as services to real estate agents. You could also look into house repair type services, selling things like gutters and roofs and bathroom remodel. Those are all great ideas. You could also look into running lead gen for businesses that are selling these inflated assets, right? So find out what the people in your network are selling, right, in their jobs. Maybe they're financial planners, maybe they're car salesmen, maybe they're doing home remodels and things of that nature. And while the iron's hot, work on ways to develop skills to develop leads for them and sell them while the going is good. Now, again, you have to understand that these commission opportunities some of them are only around when the iron is hot, right? And they'll just literally disappear when the world comes back to normal or inflation goes away. But if you hustle over the next 6 to 9 months, you could make a lot of money. And then when inflation comes back down, those opportunities dry up, you will have the opportunity to choose where you want to invest the money that you made. All right, guys, so the real opportunity right now during inflation, it's actually kind of simple. You are looking to sell things that you know are inflated, so things that you own that you know have inflated prices. Do what you can to reasonably sell those items while they're at the peak. Now, if it's going to set you back, we talked about housing and stuff. If that's going to set you back because you got nowhere else to live, it's just not an opportunity that you're going to be able to do, and that's okay. There's plenty of other ones. Do you have baseball cards that have inflated in value? I don't know. Do you have a classic car or a used car that you don't use anymore? Sell it while it's at an inflated value. Then once you have the cash from those sales, that's your ticking time bomb. Or if you borrowed from the bank, that's your ticking time bomb because you have this cash. You're looking for zero entry opportunities, right? You don't want to have to buy assets to build this business during a high inflation time, right? You don't want to have to be a new home buyer right now. That's the worst situation in the world because you're buying stuff at a marked up premium and you have nothing to sell to offset that price. So you're looking for zero entry. It could be selling on commission. It could be starting a business that's based around elbow grease or services more than it is on opening a chain of 25 stores, right? Zero entry opportunities that can be marked up in accordance with inflation. That's where you're going to get the most returns for your money right now. On the stock side, it's all about distress and growth opportunity. Unfortunately, there's not a ton of value growth right now, and that's okay. You can still pivot by focusing only on things with extraordinary long-term value, extraordinary runways to growth and profitability. The catch is the price that you pay for them. If you're paying the inflation prices, then they are eventually going to come down. If you use like an ETF methodology, though, you can kind of balance out some of that downside. And again, look to dollar cost average. Ideally, look to buy on red days, as red as they can possibly get, in industries that you know 100% for sure are going to grow, 25+%. I think that that's your bare minimum in an inflation environment because they're going to have to survive the inevitable dip that will come when the inflation sorts itself out. All right, guys, just a little bit of a brainstorm, totally different type video from me today. I hope you enjoyed it. I hope it gets you thinking about your own situation. We're entering an odd time right now, an exciting time, and you have to choose wisely to make sure that you can make the most money off of the opportunity for the reopening and inflation over the next 6 to 9 months. Thanks for watching. We'll see you on the next video.